Everyone's talking about huge tax refunds in 2026, even predictions of the biggest refund season ever. But here's what's getting missed. Most Americans aren't guaranteed extra cash, and many could be disappointed when they actually file. And that's not because taxes suddenly went up, and it's not because people did anything wrong. It's because of how refunds really work. A bigger refund on paper does not automatically mean more financial relief. In many cases, it just reflects how much was taken out early and returned later. And yes, refunds are projected to be larger on average. New tax laws passed in 2025 cut individual taxes and expanded deductions, but the IRS didn't update the paycheck withholding rates mid-year. That meant many workers unknowingly paid too much tax throughout the year. Because of that over-withholding, refunds in early 2026 are projected to be higher on average. In some cases, up to about $1,000 per filer. That sounds like a gain, but it is important to understand where that money actually came from. That money wasn't new income, and it didn't come from higher pay, and it didn't come from lower prices. It was money that was already yours, just withheld early and returned later. That's why higher refunds don't automatically feel like relief. This is where refund headlines can be misleading. They focus on average, not on individual outcomes. Not all taxpayers qualify for the same deductions or credits, and many lower income workers who take the standard deductions may not benefit as much as those projections suggest. Some people will see bigger refunds, others won't. If you already adjust your withholding, didn't qualify for the new tax breaks, or had an income change during the year, your refund could be smaller, flat, or non-existent. That's where disappointment sets in. When expectations are built around big refund headlines, a normal or smaller refund can feel like something was taken away, even when nothing actually changed. There's another issue most people overlook. A refund isn't extra money. It's delayed money. Bills didn't wait. Rent didn't pause. Credit cards didn't stop charging interest. So by the time the refund arrives, it often goes towards catching up, not getting ahead. For many households, refunds end up covering credit card balances, utilities, medical bills, and past due expenses. That's why even larger refunds may still feel unsatisfied. They're closing a gap, not creating a momentum. And here's the part that's easy to miss. Because withholding tables are now updated, many workers will actually see slightly higher take-home pay during the year. That sounds like a progress, but it also means the system is quietly shifting. Less money coming back later as a refund, and more responsibility to manage cash month to month. And that's why this feels harder for so many people. Refunds used to act like a buffer, a once-a-year reset. But when that buffer shrinks, every unexpected expenses shows up immediately. Even if your total income hasn't changed, the timing has. And timing is what people feel first. So yes, refund season is coming. And yes, some refunds may be larger. But refunds don't fix cash flows. They don't change monthly bills. They don't lower prices, and they don't erase the gap between income and expenses. They simply show you where the gap already existed. That's why this refund season may disappoint many Americans, even while the headline sounds positive. Thank you for watching.